So what's the best investment for 2026? I mean, it's the question, right? You turn on the TV, you scroll through social media, and it's just this wall of noise. One person is screaming, buy stocks. Another one says, no, no, gold is the only way. And then you've got the real estate crowd insisting it's the only truly safe bet.
You hear it everywhere, right? The stock market's gonna boom. Oh, wait, gold is absolutely crushing it right now. But hold on, your uncle says real estate is the only stable place to put your money. It's enough to make your head spin. So what's the real answer? Which one is it? Well, here's the thing. That's actually the wrong question to be asking.
Yeah, see, framing this like it's some kind of competition, that's the very first mistake. So in this explainer, we're going to break down exactly why that question is basically impossible to answer. And we'll get to the much, much smarter question you should be asking yourself instead.
All right, let's just dive right into the two biggest mistakes that trip people up. First, believing that whatever did great last year is just going to keep winning forever. Spoiler alert, past performance is absolutely no guarantee of what's coming next. And the second mistake? Blindly following some guru you saw online who swears they found the one magic asset. Come on, you know they're probably just trying to sell you something.
Okay, here's the reality check. If you zoom out, I'm talking way out, like 10, 20, or even 30 years, pretty much all these major assets tend to go up. Stocks, real estate, even gold. They'll likely be worth more way down the line. But, and this is a huge but, in the short term, say the next 1 to 5 years, their paths can go in completely opposite directions. One can be shooting for the moon, while the other is in a total free fall.
So why can't you just pick one and call it a day? Well, because the economy right now is like this giant tug of war. You've got all these conflicting forces pulling assets in totally different directions. Let's break down exactly what we're all facing.
I mean, look at this. We've got at least 5 major things happening at once. The US dollar is weakening, which might be good for big companies selling stuff overseas, but it quietly shrinks the value of your savings. Then you have interest rates, which could change and cool down a red-hot real estate market almost overnight. Don't forget stubborn inflation, just silently eating away at your cash, which in turn makes something like gold look way more attractive. And then there's this really weird split we're seeing. The markets seem to be booming, but a lot of regular people are feeling the financial pain. You put it all together, and what do you get? A whole lot of uncertainty. And hey, this isn't just some abstract economic theory. I mean, listen to this quote. When there's talk about wanting a weaker dollar to help businesses sell more stuff abroad, that has very real consequences. It might boost profits for huge corporations for sure, but at the exact same time, it's reducing the actual buying power of the dollars sitting in your own bank account. So how are you supposed to think about all this? Well, the first step is to completely change your perspective. Stop thinking of these investments as horses in a race, trying to see which one comes in first. Instead, I want you to start seeing them as different tools in a toolbox. Each one is designed for a very specific job.
Let me show you what I mean. Think of stocks. That's your growth tool. You're basically betting on the future of the economy. Then you've got gold. That's your defensive tool. It's a hedge, kind of like insurance, for when you're worried about the dollar losing value. And then there's real estate. That's your stability tool. It can provide steady income from a physical or hard asset. Plus, it comes with some pretty nice tax breaks. See, each one does something totally different.
Okay, this brings us to what might be the single most important part of this entire conversation. It's not really about what you buy. It's all about how you think. Real long-term wealth is built on your mindset, not on chasing the latest hot tip. I mean, just take a look at gold as a perfect example. It went nuts after the 2008 crash, right? But then in 2012, prices totally collapsed, and it basically did nothing for 8 long years. Then, since 2020, boom, it's been on another massive run. This is what we call an asset cycle. And the key lesson is, nothing, absolutely nothing goes up in a straight line forever. And listen, this isn't just a gold thing. Let's look at 2022. Real estate was on fire, but at the same time, the stock market dropped like 20%. Now rewind the clock about a decade, and the situation was the complete opposite. The point is, what's best is constantly changing.
This whole thing really creates 2 very different kinds of investors. First, you have the chaser. This person is all emotion. They hear their cousin just made a killing on some investment, so they jump in right when prices are at an all-time high. And then when things pull back, they panic and sell at a loss. But then you have the finder. This person does the exact opposite. They're strategic. They're looking for great assets that nobody's talking about right now, things that have been beaten down and are on sale.
And honestly, that's the secret. It's that simple. But it goes against every single one of our emotional instincts. The crowd always buys when there's hype and excitement. But real wealth, that's built in the quiet moments. It's built by buying great assets when they're on sale and nobody wants them.
All right, so let's make this super practical. How do you actually build a personal strategy that can handle whatever the economy throws at you?
Well, it all starts with what I call true diversification. And listen, owning 3 different tech stocks is not diversification. That's just putting all your eggs in one basket, a basket called tech. Real diversification means owning different types of assets. That way, if stocks are having a terrible year, maybe your real estate or your gold is doing great. It's about being prepared for any economic season, so to speak.
But hold on, this doesn't mean you have to run out and buy everything all at once. In fact, you absolutely shouldn't. A way smarter approach is to just start with one asset class. Pick one, learn everything you can about it, get good at it, build a solid foundation. Then, and only then, do you expand into a second one, and maybe a third one down the road. You build your portfolio thoughtfully, piece by piece.
You know, when it all comes down to it, it's about this. Smart investing is patient. It's about finding and then waiting for the right opportunities to come to you, not frantically chasing them because of hype or fear of missing out.
So let's wrap this up by changing the question. I want you to stop asking that impossible question, what's the single best investment? Instead, start asking yourself a much more powerful, much more personal question. Based on what I know, my personal goals, and what the market is doing right now, what is my next best opportunity? Now that is the question that will actually help you build wealth.